Hello there, it's me, Luwasi Forex, and I'm here to talk to you and teach to you about trading and trend analysis. But before I go on, I'd love to thank my mentors, Robert Kiyosaki, who wrote the book Rich Dad Poor Dad, Tim Sykes, who wrote the foreword to the book The Penny Stock Course, and Matthew Creator, who wrote the book Rocket Stocks, and you can find all their books on Amazon Kindle. Now, let's just jump right into it. Now, we're looking at Bitcoin, and Bitcoin has been a very rough ride. Bitcoin has been on a very rough, volatile ride. There were two buy signals. The first one appeared right here. This was the second one, which appeared here, and the third one, which appeared here. So with Bitcoin, we have a range of buy signals. We have a buy signal should be here, and then we have another buy signal here. So in terms of buy signals, we're trading the range, right? With Bitcoin, we're trading, so we're within this range. So this range means this is the best range to buy Bitcoin. So ideally, you want to buy when it's below right here. So Bitcoin is definitely in a good buy signal. Now, another thing I want to talk about is something that I call the rocket booster strategy. So the rocket booster strategy is basically based on two moving averages. The first one is the 50-day moving average, represented by this blue line here, and the second is the 200-day moving average, represented by this red line here. Now, when the 50-day moving average and 200-day moving average cross above each other, it will show you a buy signal like this. All right, a buy signal. So these were the last two buy signals, and as you have seen, Bitcoin hasn't dropped since. So we have a buy signal here, and another significant buy signal right here. So this market has been a bit different. It was different from the other market that happened last time. In the other market, it was more of, it was also very volatile. I remember the buy signal appeared right here, and it never lasted that long. We weren't really in the volatility space. I remember within a month the price of Bitcoin shot up, but then it crashed as quickly. So I think this bull market that we're in today in Bitcoin, I think it will be one of the best times to go in. Another one that I found was gold. Finding gold was very interesting. It was a very interesting process, because with gold, again, gold is very similar to Bitcoin, yes, but then with gold, it's more of like you have this thing with gold where it's it's in this position where it is an asset during inflationary times. Gold is an asset during inflationary times. And so the first buy signal I saw was right here, and this is the second buy signal that I saw. So usually gold and Bitcoin tend to gold and Bitcoin usually tend to follow each other. Also, you can look from the candlestick chart patterns to learn more about candlestick chart patterns. I would suggest you get Steve Nison's book on candlestick chart patterns. Now, I want to show you something. On TradingView there's something called screeners. So on screeners I have this powerful screener here. Now as you can see, the first thing about I used the DEX screener, and I said price should be above the 50-day moving average. 50-day moving average should be above the 200-day moving average, and then the price should be above both moving averages. It should gap up as well, and it should follow the parabolic SAR, which crosses down. Now Paxos Gold is a gold token produced by Binance. Now according to the Uniswap market, it has followed the pattern exactly. So this is called the rising three soldiers, which is a very positive pattern. Whenever gold appears as on this index, it is a very powerful move. I mean, it is nothing to play with. Once it appears on this screener, we are in business. All right. This is a new one that I came up with using the stochastic RSI. It's not a very powerful indicator. It's there. It's medium, but this one right here, in fact, I wouldn't even put Bitcoin there. I would just put gold. I wouldn't even put Bitcoin there. I did see Bitcoin there, and I don't remember what I did or what happened after that. But if it appears on this screener here, or on this screener, if gold or a forex pair appear on this, any one of these two screeners, then we are in business. Especially this screener here. Then we are definitely in business. 0% and above, of course, it has to cap up. So if gold or silver if gold appears in this, then we are in business. It's one of my best indicators. This one I just recently came up with it. It is good for trend trading at a low margin of at least 5x for forex, because forex you don't want to go above the board. And so I did make some forex trades here. And so again, there's always volatility, but our risk was below 1%. We traded with $1,000 without using leverage, and just to keep our risks low. Again, with trading, I do not recommend to use any form of leverage. So as you can see, we have the rising three soldiers here. EURAUD, and then we have EURCAD. Now with EURCAD, we do not have the rising three soldiers. We more have what's the name of this candlestick pattern? I've forgotten the name of this. I think it's called the counter attack. I don't know if I'm right or wrong, but I think it is called a counter attack chart pattern. It looks like a counter attack to me, or a dark cloud cover. It looks a little bit like a dark cloud cover, or a bullish harami if we're to include the range. But it looks like a dark cloud cover or a rising three methods kind of chart pattern. Either way, it looks like a reversal pattern to me, and maybe that's why the risk level is a bit higher here. But ideally, we want a candlestick chart pattern that the rising three soldiers, which is my favorite chart pattern, which is what we also have, I think, in gold as well. We have three green candlesticks like that. That's called the rising three soldiers. Now for the stochastic, it wasn't hard at all. I did it using this screener, but as you can see, there are so many complications, so many things I had to put in place so that it could come out, nice and well. But I'm going to demonstrate to you how I did it without the screener. So we use the stochastic right here. So now as you can see, the two moving averages have to be above this 50 level on the daily chart pattern and below the 50 level on the weekly chart pattern, which is what you have with gold. So that's how the strategy is. It is very simple. And the good news is, if you know how to trade gold and silver, then if you know how to trade gold, then you can use the same pattern for trading silver. And usually, even though the strategy does not apply to silver, but usually when you buy gold, ideally you buy silver, because silver, what people believe is silver outperforms gold. So we have that core relation of gold and silver. So the indicator is very simple. So again, the price has to be above the 50-day moving average and the 200-day moving average using the rocket booster strategy on the weekly chart pattern. The stochastic has to be below the 50 level here, right there on the weekly chart pattern. Then on the daily chart pattern, both stochastic lines should be above the 50-day level. So we're going to do it manually, right? So I want to show you how I do it manually. Excuse me. Excuse me. It's a little bit cold. We are in cold season where I am. Just a second. Yeah, so that's it right now. Sorry about that. I was just trying to turn on the camera so that you could see me right here. All right, so as you can see here, so what we're going to do now is we're going to do this manually. Excuse my this is a towel. I just want my hair to dry. So we're going to do it manually now, the strategy which I spoke of. So let me turn off my camera here. Let's do it manually now. Okay, we'll start with Forex. Now you have to do this on the weekend, all right? So the key is to do it on the weekend. That's the key of my strategies. You have to do it on the weekend. Now, can you do intraday trading? Yes. Now the problem with intraday trading is you will not get the best entries, right? You won't get the best entries. You want to trade basically on Monday. All right, there we go. So remember the strategy. let me see if I can find let me see if I can find a graphic. Just a second. All right, so I have found something to show you how the strategy is. So it's basically like this. So this is the stochastic RSI, right? So the stochastic RSI has to be on an overbought zone on the daily chart pattern, and then in an oversold zone on the weekly chart pattern, and it has to follow the rocket booster strategy. So this is called the bullish divergence pattern. Okay, and the indicator is stochastic RSI. So that's what we're looking for. Let's dive into it. Also, feel free to pause the video on that chart to master it. So we'll start with the weekly chart pattern. Remember, you have to do this on the weekend. So that one is perfect. Almost there. I'll keep a watch on this one. But maybe next week. Maybe next week, this one as well. This one is definitely goodbye. This one is good for shorting. That's the thing, I can still find, and another thing about this strategy, I can still find good plays just manually. Like, I don't even need the screener. Like, the screener is just for formality's sake, but I don't need the screener to you know, to find those plays. This one is close enough, though not perfect, but it's close enough. It's not perfect, but it's close enough. This one is also a good buy, and you can see the pattern. It's called the rising three soldiers. That's the chart pattern. Alright, so let's delete the ones. Let's let us study what we have here. Now, one thing I love about this is it has got a similar pattern. This pattern is called the rising three soldiers, and you come on the weekly part here as well. So this one definitely is a buy. It is definitely a buy. We put right there. So 3S stands for rising three soldiers. 3S. Buy 3S. Falling soldiers. This is definitely a sell. 3S. Falling three soldiers. This one is also a sell, but it's not the three soldiers. It looks like an engulfing pattern, or like a hammer. Yes, I would also sell this one as well. I do not recognize this chart pattern. Unfortunately, I don't recognize it, but this is also a good buy as well. This is the rising three soldiers. So that's how I would find the trades. So obviously this pattern, I love the three soldiers. It's my favorite, one of my favorite chart patterns. Even the falling soldiers is also cool. This one's also good. This is a hammer, but it's coming from a bullish engulfing. It's coming from a bearish harami. Then it settles down on a hammer. So this is my watch list for forex. I think we have 1, 2, 3, 4, 5. So this is just me doing it. You know, manually, right? It's just me doing it manually. So I could also do it for stocks as well. It's basically the same thing, even though I stopped studying stocks for whatever reason, because my aim was not to trade in a trend. My aim, my personal goal is to use margin. So let me see if we can do the same with stocks. So again, let's look at the strategy. That's the strategy. So for buying, right, and for selling, it's the opposite. If you were selling, it would be the opposite, right? But now we are in the buying mode. So that's the strategy. So we'll start with the weekly chart. Remember, we are buying. And we are on the weekly chart. So candlestick chart patterns are very important. You know, they give you an edge It is important to master candlestick chart patterns, right? Like, remember, for all those strategies, the main candlestick chart pattern I was looking for was the rising three soldiers, because honestly it is not enough to just focus on Western technical analysis. Western technical analysis is okay. There is nothing wrong with Western technical analysis. I could see the advantages of it, especially when using tools like TradingView. But I feel like Western technical analysis does have its own limitations, and having Japanese candlestick chart patterns in your repertoire, it kind of increases, your chances. So this one is close enough, not exactly, but Nike is close enough. Let's see what we have. So the closest I can find is Nike. Though not perfect, it's the closest. And this pattern is called the bearish and go. Is it bearish harami? It's called the bearish harami. It's the closest we have in terms of to sell. So just based on my strategy, I would definitely look into shorting Nike. And I think we have an earnings report coming out by the end of this month. So if you can get in right now, Nike will report fiscal quarter earnings on June, expecting EPS, BOV forecast net sales of 10 billion, focusing on inventory sales strategy. Did Cohen lowered its price target for Nike to $57 from $58. Analysts have an average overweight rating with a mean target of 73.02. Nike's EPS is lowered to weak demand in China and currency effects, while the fiscal 2027 EPS estimate stays at 2. So this is the one that I would short sell. So you have at least until the earnings report. Usually at the earnings report, there should be a price fluctuation, right? So yeah, I would definitely look into short selling Nike. So that's the strategy. Man, which forex do I remember? I think it was GB. Yeah, I think these are the ones. Yeah, there we go. So these are the ones that we found. So again, it's important to note that you have to do this on the weekend. Do not do this during the weekday. I was tempted to do it during the weekday, which was crazy. And again, you can use the screeners, but I think for this strategy, I'm just going to avoid the screeners. Like, I wouldn't use the screener for these strategies, but I have employed the screener just to I've employed the screeners just to just like a second opinion, just like as a second opinion, which is okay. So that's the way it is. So definitely I would buy gold, especially at a higher margin. So as you saw, I just did it physically. I didn't use any screener, and I found Nike. I found this one, which is the the hammer, found this one here, I found this one here as well, which is the falling three soldiers. So that one here, that's the rising three soldiers. Then this is definitely a bullish harami, though it hasn't completed. You know, it is there. You know, it is definitely there. It does look like a middle market, right? Like a counter attack, like a reversal here. So it looks like a, you know, like a black marabozo, you know. So it's not exact, but in terms of trading, these are definitely some that you should look into. And if you look at it, you notice that the one with the rising three soldiers had less risk attached to it. The rising three soldiers, because it had a bullish harami on the week and a rising three soldiers on the day. Right, so let's see if we have a bearish harami here. So this is similar. You can see bearish harami on the week, and then the falling three soldiers on the day. So this one offers less risk. This one I would not trade it. I think it is too risky for me. So on the week we have a bullish harami. On the day we have a rising three. What do you have on the day? We have okay. Alright, this one we have a bullish harami on the week, and then we have a hammer. So we have two bullish and two bearish haramis with a harami here, a bearish harami and a hammer there. So this one, I don't know what the volatility is. I would have to look into it. You know, it looks like an evening star, and then it just falls into that. So I am going to look at it as well. But these two definitely offer less risk reward. So let's document it. So we have paint here. So on the week, so that's the pattern. All right. See if I can save this. Just a second. So yeah, so that's it right there. This is the strategy. It's not that hard, but I think I can. I don't know. I think I can draw it. I can draw them for you. Oh yeah, I think I can draw them for you. Where's the color palette? Sorry, there's supposed to be a color thingy. There we go. So this is a bullish harami. It looks like that. Then this is a bearish harami. It looks like that. Right? And then the rising three soldiers looks like this. Okay. Then the falling three soldiers looks like that. Right? So this is called the bullish harami. This is called the bearish harami. This is called the rising three soldiers, and this is called the falling three soldiers. So kind of like what's happened here on the daily pattern, right? So remember this. Anyway, I don't know what I'm trying to do. So this is on the week. This is on the day, right? So ideally that's what we want, right? So this is on the day, and then we have two of them, but this one it hasn't completed, right? It's not perfect. It looks like a bullish harami, and then with a hammer. Now the problem with hammers is and that's why I would remove this one, because the problem with hammers is they do tend to produce flat markets, right? Hammers do tend to produce flat markets, but they also show solid support, so it could go either way. There is no harm in trying a limit order, so it could go either way, but the best ones are this one here and this one here. And as you can see on the week, we have a bearish harami. Oh crap, sorry, I made a mistake. Where's the rubber? I made a mistake. So a bearish harami, as you can see, a bearish harami looks like this. Don't know, I'm trying to make it straight. I think that's how a bearish harami looks like. So this is a bullish harami. This is a bearish harami, right? So the green one is the smaller one in the bullish harami. The green one is the red one is the small one, right? Then in the bearish harami, the green one is the small one. So it is a little bit confusing in the beginning, but with time you will get used to seeing them like this. Though in Nike it hasn't really shown up, because with Nike it looks like a bearish harami on the daily and a counter attack on the week. So it is not exactly, but you can kind of get in, you know. These patterns are not perfect, whether it's unfortunately or fortunately, but as long as you can get in, that's what matters. So I would love to thank you so much for watching this video. Before I go, we can put a limit order Nike. There is no harm in that. So I would love to thank you so much for watching this video. Please don't buy what I tell you to buy. Don't sell what I tell you to sell. This is just for educational purposes only. Do your own research before you buy or sell anything. Do not trade with real money. Start with a simulation trading account first. Practice for like 2 years before you use your real money. I would love to thank you so much for watching this video. Take care. Bye bye.